Welcome to the Trending Report, brought to you by USA Financial. The Trending Report is a series that aims to focus on the trend lines rather than just the headlines. Each episode features commentary around the state of the market, as well as other factors that may impact your personal finances. The host of the Trending Report is an investment advisor representative of and securities are offered through USA Financial Securities, member FINRA SIPC, a registered investment advisor. The Trending Report is educational and not intended as personal financial advice.
Hi, this is Kevin Roskam with USA Financial, and this is your November Trending Report. For this month, in addition to looking at the trends, we want to talk a little bit about something that we talked about last month, and that was the trees changing colors and losing their leaves. Last month, we talked about the fact that in Western Michigan and other parts of the country, we know that the trees losing their leaves is inevitable. We know that we get to see all four seasons in the state of Michigan, and part of the changing seasons is the changing of the trees. Now, last month we talked about the fact that not all trees lose their leaves at the same time. We don't know the exact day that a given tree is going to lose their leaves, but we do know that eventually they will. That changing of the seasons is inevitable. And we also know when it comes to the stock market that the stock market runs in cycles. And so a month ago, we were worried about what the stock market would do in reaction to the elections of November. And so you may have thought, or maybe someone you know may have considered, based on the uncertainty that might happen, I think I should pull my money out of the market. Or as a result of the election, based on the uncertainty of what might happen, I think I should pull my money out of the market. Well, now that we've gotten through this election season, is our uncertainty gone? Can we just relax now until 2026 and we have the congressional elections? Or 2028? No, of course not. Now that the uncertainty of the election results has passed us by, there's always another uncertainty. Maybe it is, what will retail sales be like after Thanksgiving? Maybe it's, what will the year 2026 bring us? And as the new year changes, do we need to worry about our money in the market? Maybe it will be after inauguration in January. Should we be worried about that uncertainty? Just like the market moves in cycles, we know, based on scientific study, that the way humans interact with the stock market is cyclical as well. And so a month ago, we talked about the trees will change. We don't know exactly when each tree will lose its leaves, but we know that they will. And because we are aware of that, we're not shocked when it happens. When we talk about a trending report and when we talk about trends, what we're trying to recognize as money managers, as trending money managers specifically, is we're trying to recognize where is the trend going. And based on where the trend is going, how do we react to it? When we look at trending, we want to do it unemotionally. We want to use formulas that help us stay disciplined in an uncertain market and in uncertain times. And so even as a month ago we were uncertain about what might happen this month, and even as now we may be uncertain about what will happen in the months to come, what we are certain of is that the trending tools that we use are always unemotional. There is no uncertainty or certainty when it comes to formulaic investing. The formula runs. It runs, results come from it, and based on the formulas, we invest in the market. And so what we're attempting to do, regardless of what's going on outside of us, outside of the stock market, outside of our offices or our homes, whatever is happening in the world around us, because we can't control the uncertainty, we want to be able to control our emotions, and that's really hard. When it comes to your long-term money, really long-term investing can only be successful if you stay invested in a strategy for the long term. And so, like I said, last month we may have been uncertain about what would happen this month. This month, we're uncertain about what could happen next month. That's normal. What's not normal is allowing that uncertainty determine how we're invested. And so, just like the trees will lose their leaves, this market will go down. We've had a great year in the market, and I'll show you that chart in a minute. But we know that at some point, regardless of who is in political office, the market moves in a cycle. And at some point, that down cycle will come. Now, because nobody knows when it is, you'll hear people say, maybe we should take profits. Maybe we should get out of the market. Maybe we should get more defensive. Well, what formulaic trending does is it takes out that word maybe. And although it can't control our uncertainty, it can control the uncertainty of the process. You know, when it comes to investment products, if you've paid attention at all, you've heard the phrase, past performance doesn't guarantee future results. Nobody knows, regardless of how good an investment has been, how it will perform in the future. What we want to do is we want to guarantee the process. When it comes to formulaic trending, we've put a process in place at USA Financial Formulas. That process, in one form or another, has been in place since 2007. And it has been refined and it has been worked on, but the process in its essence has remained the same. And because we can guarantee that process, even when the market is uncertain, we know that the process to screen the stocks inside of the market is certain. And we know that if we allow that unemotional discipline process to work on our behalf, that we have a better chance of staying invested in the strategy for the long term. And if you stay invested for the long term, you have the opportunity to see long-term success. And so really the goal of trending and the goal of using money managers that don't allow their emotions to get involved with managing your money is to give you the chance to experience long-term success, regardless of short-term uncertainty. We know the market will go up and down, but what we don't know is when. And so rather than use our gut feeling or our hunch or what's going on around us to say, maybe we should do this or maybe we should do that, what we have seen over time at USA Financial Formulas is that when we allow the strategies to work unemotionally in a disciplined manner on a set schedule over the long term, regardless of short-term volatility, we're able to participate in the trends as they happen. And so let's look with that in mind. Let's look at the last 30 days in the stock market. I love these first pictures, this first 30-day picture, because what you see is volatility. You see a quick drop, and then you see it rise after last week. And if you're not in the market, you don't experience this. And so the last month, although there has been a little bit of volatility, it's obviously been in your best interest to be invested over the course of the last month. And none of the money managers we use None of our partnerships at USA Financial Formulas decided to get defensive in the last 30 days. And thank goodness. But let's look at the year to date. Over the course of the last year, since January of 2024, there have been some market drops. And there have been times where our emotions could get the best of us. But when we look at this now 11-month trend, we can see that despite the short-term volatility, using our trending tools gave us the opportunity to stay invested in the market. Now, just as a reminder, we have strategies that look at the market on a daily basis to determine if we should be in or out of it. We have strategies that look at on a weekly basis how we should be exposed to the stock market. We have strategies that determine on a quarterly basis and a monthly basis when we should be in or out. And what we have found is that the best allocations have some exposure to each of those time frames. But over the course of this past year, it has been in our best interests to stay invested in this stock market. And that brings us to the long-term trend. Looking at the last 5 years of the S&P 500, again, we see volatility. Performance doesn't happen in a straight line. All the way to the left here, we see what happened in March of 2020. A tremendous drop in the market. But it happened so quickly that a lot of the trending managers didn't recognize it as a trend. And thank goodness they didn't. Because by not seeing that 30-day drop in the market as a trend, it allowed us to stay exposed to the market and catch most of that upside after March of 2020. And we see the same thing as we go on through the years to today. The trends are still positive. And as we go into the end of this year, and as we look towards 2025, it's normal for us to feel uncertainty. It's normal for us to feel some emotions. You know, how long do we keep our money in this market? It seems like it's doing so well. At some point, we know it has to turn around. But the successful investors, whether on their own accord or by hiring unemotional money managers, have the discipline to stay invested. Is the market overbought right now? Is it overvalued right now? Maybe. But how long will it continue to be? Because if it's overvalued now and it keeps going up for the next 12 months, does it matter that it's overvalued? You see, that's why it's so important to have a disciplined, unemotional approach that gives you the opportunity to get away from the market and avoid catastrophic loss. Because I can't tell you when the market's going to correct. I can't tell you when the trend will break. And I don't want to guess at it. You see, that's what makes trending so important. And so as we finish up our trending report for November of 2024, think about how important it has been to stay invested throughout the course of this year. Think of the times where we may have wanted to get out of the market, or we may have been uncertain about where things were going to go. And look at what our trending managers have done for us. They've taken the guesswork out. Now, they're not going to be right every time, but they give us the opportunity to be right over time. And that's why trending is so important. This is Kevin Roskam with USA Financial. Thanks for your time, and we'll see you next month.
Thanks again for listening to this episode of The Trending Report, powered by USA Financial. We invite you to visit usafinancial.com to find out more about our work with independent advisors and their clients all around the country. Any projections, targets, or estimates in this report are forward-looking statements and are based on the firm's research, analysis, and assumptions. Due to the rapidly changing market conditions and the complexity of investment decisions, supplemental information and other sources may be required to make informed investment decisions. All expressions of opinions are subject to change without notice. Clients should seek financial advice regarding the appropriateness of investing in any security or investment strategy discussed.